propfirmscalping.com, tools I built for a group that's been on TradingView for quite a while, and now they've incorporated Claude AI to the platform. Now I'm learning all that process too and working with it, and it's been very eye-opening. So let's talk about the PFS for prop firm scalping. These are the PFS system tools. Let's talk about the PFS momentum, which is basically a hybrid. It's hybrid momentum analysis. There's axis of adjustability. I can adjust the momentum in different ways. And I'm just going to show you some of the stuff that, at some point here, I'm going to have Claude AI looking at some concepts in how to use momentum for various setups. Or maybe you'll utilize it as a patternized filter for when you're looking at price and working trades on price. Now I have this on kind of a low time frame. What I'm down, I'm down in a 6. So, but I just want to show you in market conditions that are a bit range bound and choppy, when sometimes it's hard to see what the direction is. A momentum tool can kind of keep you centered and focus on what's important. Is there momentum starting to develop? Is there trends in that momentum you can start visually seeing? Some sort of visually simplistic mechanism like a momentum tool. But the momentum tool has to have good math in it, and it's got to be responsive to price, or it's old garbage tools like MACD and some of the prior squeeze tools, squeeze momentum and all that. If the math on board is basic, then the indicator is not going to be very responsive. And then a lot of times the adjustability of the indicator has big gaps in it. If you use certain types of math, you can get granular fine-tuning adjustability in the indicator that has linear adjustability. So meanings when you're making incremental changes, there's not like big jumps between, going from maybe in the indicator going from, let's say go from 111 to 115, but then your indicator makes a big adjustment, and then you go from 115 to 120, and then you hardly see any adjustment. That is a true sign that some of the math isn't coordinated properly in the way the indicator is coded. So, meaning, and some of it's not, and sometimes it can not be the math, it's the computational style. It's how is the math being utilized in the programming code to look at price. Especially if you have an indicator that's paying attention to cyclical nature of price, momentum nature of price, like when is price getting linear, when is price cyclical, over and above just measuring raw momentum. So you can have an indicator doing more than one thing if it's coded right. And yeah, it might look like something else out there, but how's it built? Some of the emails I get sometimes from people, I can tell they have zero understanding of the difference between free, kind of on every forum type of indicator versus sometimes, stuff that's built with some, thought behind it. I can go in the Ford dealership lot and I can look at 6 type F-150s. I can look at a XL, boring as heck, gets the job done. And I can look at an XLT, it's got more stuff on it, it's different. Then I can look at something like a Tremor version, and so on, or a what's the one they have? King Ranch. Yeah, I like some of those King Ranch. So in the end, they're all F-150s, but they're all very different. They have different engines, different suspension types, and so on. So let's get into the indicator, and I just want to show you, so you kind of have some food for thought, some ways that you can look at a momentum tool to help you see when the market may be shifting in momentum. So right here, I'll use a vertical line. And the first thing I'm going to talk about is the momentum tool that's been in a down push period below the lowest dotted line, and having the moving average that's reading the momentum tool coming back and plotting above that lower dashed line. So we have a center line, a lower dashed line, upper dashed line. I could make those more bold, but I kind of don't want to see them when I'm trading like real strong, so I keep it kind of very narrow. But the idea is I'm not waiting for it to go through the midline, the center line. I'm just waiting for the moving average to come up and basically get a close at or above that lower line. And then there's some expectation that there should be some momentum follow through out of that. You got a little bit, not a lot, but I mean, you got something. And this is a move where the market had a big, sell-off leg. It bounced a bit, and then it resumed some selling. And we're getting into the lunchtime, mid part of the day, where some of the participation can be dropping off. So, there might have been some participation, and then the participation of the larger players, hedge fund institutionals, dissipated. So then we peek our head. The moving average peeks its head above the upper dash line, and then it plots below it right here. Now this one ended up grinding down a bit, where the last one, it's like you caught the last little bit of momentum. This one, from the point where the moving average went above the upper dash line and closed back below it, it grinded down for a bit. Now, this is not my favorite time of the day to be trading, 11 a.m. to like 1 in the afternoon. That can be a junk zone many days. But, I'm just showing you, I picked this by design because of how choppy it was. And then I went down on a little bit lower time frame than I typically trade to make it even more choppy. But I can show you that go grab a MACD, or go grab, trend this or this, that, and see if it can do this and be as effective. Just not going to happen. Or what's that one? That Cipher tool? Oh gosh, what a piece of garbage that is. That thing lags so bad. And then it has big gaps in the settings. I can just tell it's coded. It's not coded in a way where the adjustability of the indicator is coordinated from one type of math looking at price to another. So anyhow, then this chopped around a bit and then pushed below. Now right here, it comes back above the lower dash line, right here, and we get some upward movement of price. So far, when we pierced that lower dash line coming from a lower downside momentum push, and then that momentum dissipating and shifting, we got a little bit of movement. At least enough where if you got in a trade and it stalls, you can at least get your stop up, bleed out some of the risk before it rotated right down on you. But then it gave a counter signal. It gave a short signal because it spent some time plotting above the upper dash line and then closed right away back below it. So any sort of long, right away now you're short, and that one works. It kind of chopped around in the middle of the two upper and lower dash lines. Then it pierced back below, so now we have some downside momentum. And then right here, it closes back above. And, middle of the afternoon, choppy, but you do get a little bit of momentum out of it. Then it comes down here, and it closes below, a little bit of momentum. Spends some time in the zero line, then pierces back above the dash line. A little bit of momentum. And then it comes back, chops around, then it plots back below the upper dash line. A little bit of momentum. Then it comes right here, closes above the lower dashed line. A little bit of momentum. See what I'm saying? It's like you're not getting in trades that are immediately going against you. You're getting something out of the entry, some excursion in your intended direction. Then it zero line rejects and it goes back below the lower dotted line. Okay, then it comes back and now it goes back above the lower dotted line. Get a decent little push of momentum. So that was just the junk fest of all junk fests. And do you see anything scary? I mean, everything was okay. You would have made it out of there just fine using bracketed trade setup where you get into a trade, your stops and targets are deployed, and you have some trail stop mechanism in place. So as price runs away from you, gets to a certain benchmark level, at least you can get your stop to break even plus. Okay, now let's move forward where things expand a bit. And I don't care what time of day it is, after hour session. I don't like trading the Asian session, but I do like the EU session. So about 1 in the morning Central Time, kind of the DAX futures start percolating. And then 2 a.m. U.S. Central Time going forward, you have full tilt London sessions in play. Cash markets are open, meaning their stock markets are open. Okay, let's go forward on this. Where are we at? We came up, came back down, came back up right here. Came right up through the lower dash line. Nice push. Come back here where the moving average on top of the indicator, reading the indicator, crosses below the dash line. So when the market starts to open up its range, so here the market was wider range, narrow range, now it's widening its range. So now it's waking up. It's getting some reactivity. So we come back down here. The moving average closes just below. And you get some downside movement. You get a big one. Then we come right here. We close above it. Now, momentum had a big sudden move because the market reopened at 5 p.m., gapped down, traded down a bit more, pierced that level, did a level sweep at the low of the prior session, and then right away buyers stepped in and grabbed it. Here came the rescue squad. So institutionals got active. Oh, no, we don't want it trading lower. Let's hold it up. It's not retailers holding it up. But right here, we close above that lower dash line, and there's a little bit of momentum for you there. Then we go back below and we come back up through that lower dash line one more time. Right here. And woo, that was a nice one. And now so far, the moving average on top of the PFS momentum is holding above the upper dash line. So these are some things where you can have AI, looking at the momentum tool on a particular instrument and time frame and say, hey AI, what are the best outcomes if I'm trading the moving average crossing up through the lower dash line? Start with this setting range to this setting range. And what do I mean by that? Meaning you tell AI, go from 70 to 150. Go from 50 to 90. Signal length. Go from, very responsive, like 7, up through not so responsive, like 19. And then it'll go do. It can look at all those variations. And in a sense, it's doing accelerated optimization. And then it'll spit out and say, okay, on this particular time frame, on the 6 Renko with 1 second data, and the standard Renko on the NQ, here's some good settings. And then you can bias to max return or bias it to most stable equity curve.